All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about a company that released earnings, and they are going absolutely ballistic. I think this company is one of the most overvalued companies in the entire stock market. I know it's a lot of people's favorite company, and I'm not saying it's a bad company, so I hope you guys will watch this video just to listen to my argument as to why I think this has gone way out of control. So the company I'm talking about is Nvidia, stock ticker NVDA. By the way, if you're new to the channel, please remember to subscribe to the channel and hit the notification bell if you want to get notified when we put out a video. Also, if you're interested in supporting the channel, you can hit the join button. It's right next to the subscribe button. If you don't see a join button, there should be a link in the description below. It's only $5 a month. Members get a lot of members-only content. We do a members-only live stream. We also have a members-only Discord. So there's a lot of benefits. We have a lot of fun, and it does help support the channel, which I appreciate a lot. So, okay, let's talk Nvidia. They're up somewhere between $70 and $75 billion in market cap just today. So my question is, when does $150 million equal $75 billion? And the answer to that is today, and I'm going to show you what I mean by that. This puts Nvidia today somewhere around $584 billion market cap. This makes it the 7th biggest company in the United States by market cap. This is an absolute monster. Like I said, depending on where the day ends today, it's going to be up somewhere between $70 and $75 billion on the day. But more than that, it's up somewhere of about $250 billion year to date. And remember, it's only February right now. So this stock has been on a vicious run up. It is way up off of its lows. Now, I will say it's not even at its 52-week high. It's not even close. So this is a stock that has been on a roller coaster ride. But when you look at the numbers, even if you love this company and you love what they're doing, I think you're going to have to acknowledge there's a potential here that this has gone to a place that's way overbought. Okay, so quickly, this is a list of companies by market cap in the United States. So just their additional market cap that they've gained this year would make them a top 25 company in the United States. They've roughly gained an entire Coca-Cola, a little bit less than a Bank of America, Costco, McDonald's, Nike, Walmart. These are all companies that in total have market cap that is less than the market cap Nvidia has gained in the last 2 months. And I don't have to go that much further down the list to get to the size company of the amount of market cap that Nvidia added just today. So today they added an entire Target to their market cap. So this is what I want everybody to remember as we do this video. This is not an Nvidia hater video. I don't dislike this company. In fact, obviously it's cutting edge technology. They're a growing company. They've got a lot of things going for them. Their products are in demand. You're going to see they're moving into some of the things that are really going to be heavy in the future, particularly AI. So it's a lot of good stuff, but it's not this good. They didn't announce anything today that makes them worth an entire Target more than they were worth yesterday. A lot of AI is getting rolled out, and this is an important piece of technology in the future, and Nvidia does find themselves at the cutting edge of this. So there is a lot of value here. I understand that. Okay, so this is an article from this morning. Nvidia earnings. Chip giant squeaks by Wall Street's expectation despite 46% drop in gaming revenue. So you can see there was some good news, bad news in this report, yet their stock is going absolutely ballistic. Okay, graphics card giant Nvidia announced its fourth quarter earnings after the bell Wednesday. So that was yesterday, beating analyst estimates on top line and bottom line despite a 46% year-over-year decline in gaming revenue. Better still for Nvidia, the company says it expects Q1 revenue of $6.5 billion versus Wall Street's estimate of $6.35 billion. So they raised their Q1 revenue estimate by $150 million. The result of that is an increase of $75 billion in their market cap. So this is where I'm finding a disconnect. They beat Wall Street's estimate a little bit on the top line and the bottom line. Year-over-year sales are actually not so great for this company, but they did increase their estimate by $150 million. So you can see that's a fairly insignificant amount. It's almost within the margin of error. This is a 2 or 3% increase in their expected top line for the next quarter. Okay, then it says, here are some of the important numbers from the report compared to what Wall Street was expecting from the company as compiled by Bloomberg. Number one, revenue, $6.05 billion versus $6.02 billion. Basically within the margin of error. Adjusted earnings per share, 88 cents versus 81 cents expected. So that is a very nice beat on earnings. So you would expect some pump in this stock. Data center revenue, $3.62 billion versus $3.87 billion expected. So that is a miss. Gaming, $1.83 billion versus $1.6 billion expected. That is a beat. However, remember, gaming is way down year over year. Their CEO said, AI is at an inflection point, setting up for a broad adoption reaching into every industry. From startups to major enterprises, we are seeing accelerated interest in the versatility and capabilities of generative AI. So this entire move and this entire narrative is all about AI. Now, it's not new news that they are in the AI business. Their numbers were very, very close to what Wall Street was expecting. Okay, so this was the end of their fiscal year 2023. So if you look at their revenue for the year, they were just under $27 billion in revenue. That means this company is trading at 20 times revenue. That is extraordinarily high. Their diluted earnings per share is $1.74. They're trading at way over 100 times earnings. They're trading at more like 80 times earnings if you use non-GAAP numbers, but somewhere between 80 and 150 times earnings. They're trading at somewhere around 30 times their book value as well. So I don't see how it's ever going to catch up to its value. And this has already happened to this company once before. This is a company whose stock just 2 years ago in November of 2021, their stock ran up to $350. So it's only at 230 something right now. So it's nowhere near its all-time high. However, the thing is, within 1 year of being at $350, this stock got down almost to $100. It got down to about $105. So you can see that is a catastrophic collapse. And I'm afraid we're on the exact same trajectory right now. So this stock may go up from here. Don't get me wrong. I'm not talking about day trading this stock. Obviously, this is not financial advice of any kind. So if somebody's riding the wave and it's going to keep going, that may be the case. But I fear this is history absolutely repeating itself. And this just happened. This stock was down from $350 down to $105. So here we go again. It's now almost a $600 billion market cap company. And I am afraid that at some point, reality is going to catch up to this company again. And we're going to have a massive, massive sell-off. I know this is probably an extremely unpopular opinion. And again, I'm not saying this is a bad company. I like this company. I do think this will be a company that thrives for years and years to come. I just don't know that they're worth 100 times earnings. And I only have to look back to just last year to see them have a catastrophic fall in their stock price. So this is NVIDIA on the 1 week time frame. You can see from March of 2021 until November of 2021, this stock was up almost 200%. It was up from around $117 all the way up to just under $350. But immediately after reaching that peak, it turned around and started to cascade down. And this stock fell very nearly 70% in less than 1 year. So for a stock of this size to pull back 70% in less than 1 year, that is an absolutely extraordinary move. But now here we go again, because with today's move, just since October of 2022, and again, it's only February of 2023 right now, this stock's up 115%. Last time it did this just a year and a half ago, it ran up to $345. So maybe that will happen again. All I'm saying is I think that the moves in this company don't make any sense. This is one of the most highly volatile companies. Companies with this size market cap, top 10 size companies, have not typically had these wild swings up and down. This is trading like a small cap, high growth stock. But it's not. It's one of the largest stocks in the world. So again, this is not a hater video against NVIDIA. I think they've got a lot of good things going on. I just think this is wildly overheated. They raised their revenue estimate by $150 million, and their market cap is going to go up $70 to $75 billion on that news. So let me know in the comments what your opinion is on this and what you guys think of this. And please remember, if you have not yet subscribed, please subscribe to the channel. It helps the channel out a lot. And also, if you want to support the channel, you can hit the join button. So thanks so much for watching, and we will see you in the next video.